Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. If you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, and sectors, looking for investment opportunities and sharing those opportunities with everyone in the community. We have a special going on. Special is the coupon code. You type that special coupon code in. You get a $25 savings, which ends up being $25 for the first month, and for the first month only on the monthly membership. It's a $100 savings, which ends up being $500 in total for the yearly membership. And if you're a monthly member, you can always swap to a yearly membership if you would like, using that coupon code special. Eric Yoon, this one will probably age really well. So it says, I'm an idiot. Why didn't I buy silver at $51? I'm not buying that crap when silver pulled back to 46. It says, I'm an idiot. Why didn't I buy silver at $60 today? I didn't buy at any of these prices. In fact, you can translate this with a 1.5, $15 to $25 is where I purchased pretty much everything. So from about 14 to 15, no, 14 to 25 is where I purchased. And then after 25, I kind of relaxed. I was like, you know what? I'm good. Uh, Now I can just ride through volatility. It's not a big deal. I look at the 50-year cup and handle pattern, which is, again, this big cup and handle here. We got another cup and handle, but the big cup and handles. Oh crap! I put XAU, XAG. So this is the big cup and handle, and again, I buy early, guys. That's what I do, and then I sit. I do nothing. Apparently, I'm a rare breed. I'm super patient. I can buy crap. I can sit in it, and I just see the big picture view. That's all I focus on. The little market wiggles in the short term, I don't really care about them. Everyone talks about it. It's almost annoying as hell to me because the short term market movements isn't where the big money is made. I go buy it when things are really cheap, and then I just sit and I wait. And everyone is so worried. Well, when's the exit? How do we get out of this? It's like, guys, this is going to be a long time. This is going to be a gigantic bull market where I make a butt ton of money. And everyone else is so worried about every little market movement. That's not how you play these things. Interest rates broke that 40, 45-year downtrend. We're breaking the 45-year cup and handle. This is where all the money's made. You sit, you do nothing, and you ride. Now, if you're not in it, why aren't you already in it? How come you're not already in it? Oh, I didn't see it. I all these excuses. I can tell you deep down, I can tell you what the root of the problem is. You chase price, and most people do not chase value. That is the root of the problem. And even if you were to be trained, most people will still say, is this good to get? Is this good to go? It's like, you have to be mentally prepared, because if you buy at 60 and you get let's say you do a retest here and you go back to 45 or 46, what are you going to do? You going to panic? You going to buy more? I mean, that's the difficult thing when you try to catch stuff mid stride, because sometimes you get these pullbacks, kind of like this pullback here. You can get a big breakout move and then the pullback to do a retest. It doesn't happen every time. And this is where you need to be resilient in your approach and strategies. Resiliency provides endurance, and endurance provides returns. So resilience, endurance, and returns are all interconnected. You take advantage of impatient people by being patient and buying what they're selling, which gives you resilience, because if you buy low, you're more resilient to market swings. Endurance is your patience. You have to be patient. You have to think like this is marathon versus a 100-meter dash. Everyone is playing these markets like it's a 100-meter dash. I'm telling you, you make all the money by playing the long game. That's the long game, and we're just breaking out. You could argue that this breakout is here because of interest rates and where interest rates are located. Now, when's the sell point? Probably after you pass away. If you're my age, it may take a while to get way up there. I'm talking way up there. We could be entering a new paradigm where things are completely different than what we just lived through. What we lived through was a consolidation in the silver price. What we are going into is a completely different paradigm that people are not projecting. Now, how the heck did I figure this out before everyone else? I'm not sure. But I bought a whole stinking bunch all through those two circles there. That's where I loaded the boat. I mean, I loaded the boat. That was it. Some people were lucky enough. I was still in college and high school back in 99, early 2000. So I wasn't prepared enough to get in at this bottom of the bottom here. What this is a falling wedge double bottom. And that's a hell of a time to be buying right here. Do you know what other asset class is right here? That it just broke out here. It's right in that circle there. Palladium is. So if you want to partake in a long-term bull market that's still pretty early, palladium just broke out of its double bottom. I'm giving you guys a bone here. We bought the bottom of the mining companies on the website. We bought that bottom. And we are up multiple hundreds of percents. Do you know how you make a big money? They say pigs get slaughtered. No, they don't. People who don't know what they're doing get slaughtered. Buying value and riding up from bottom of double bottom all the way up is where the big money is made. Now that took 15 years to do that. 15 years to go from $178 to 2,811. And now we did a down cycle. You could have purchased this at bottom. We did it with a lot of the mining companies, and now we're in another up cycle. That is how you control risk. Now platinum's got a gigantic setup too. So don't even get me started there with all the people telling me why platinum was such a horrible purchase. Kind of annoyed with some of this. Money Cruncher says, should I pay off debt or invest? How I think about it. Sign up for 401k up to the match regardless of debt. That's free money, so to speak. Pay off any debt 7% plus. Don't touch any loans with under 4%. 4 to 7% is tricky. Depends on liquidity, risk tolerance, and timeline. Go 50-50 if you can't decide. So he's saying he wouldn't pay off early the debt that's under 4%. And that's where I'm at. My mortgage is 2.75. I'm pretty sure inflation is far above 2.75. And I'm not talking about the crap that they make up. I'm talking about real rates of inflation. Now, if it's over 7%, that's pretty high. I would agree with what he's saying here, for sure. Jim Rickard says gold prices could reach $10,000 an ounce by late 2026. Wait, what? Late 2026, 10,000 bucks an ounce? Replay of the 1971 to 1980 scenario would put gold close to $100,000 an ounce by 2032. Do you realize what commodities are going to be priced at if gold goes to that level? 100,000 bucks by 2032? Really? I mean, that's crazy. That's awesome. I guess. It says the legendary Jim Sinclair's long-term gold forecast from 2009 was 50,000 bucks an ounce. We suspect Sinclair would concur with Jim Rickard's latest outlook for gold. And it says 10,000 per ounce or higher suggests gold will reach 28,000 per ounce by 2033. Of course, this method is arbitrary. Gains could be much larger and come much faster. A replay of the 1971 to 1980 scenario would put gold close to 100 grand per ounce by 2032. With this as background, it's entirely reasonable to suggest gold could reach 10 grand per ounce by late 2026 on its way much higher. Now, there's people asking me about exit plans. Guys, we're going way up. And it has everything to do with the market conditions that we just entered. And people, it's going to blow their minds because they're not able to think like we just made a U-turn. And everyone is thinking linearly that we're just going to continue on the old path. We took a U-turn already, guys. It's behind us. That old market condition is leaving. We're going to be leaving that old market condition while everyone's psychology is still over there. The ones that are first and early, we're going to leave you in the dust. We are going to leave you in the dust. Because as we break these gigantic patterns, as we enter this new paradigm, we will continue to move on up. We've already positioned for the move. We've already are up multiple hundreds of percents, and then we have to sit and do nothing. Markets are slow. This isn't swipe left, swipe right on whatever program you're on. This is kind of boring, and you just sit and do nothing. That's where all the money's made. And I'm going to rack this thing up. That's what I'm going to do. I'm going to rack up those gains and do whatever the heck I want. That's what's going to happen. Provide financial security. Kurt says he retired at 62 years old with 2.1 million in his IRA. I'll do Roth conversions when I need the money. He waited until 73. Now RMDs force 85,000 a year in withdrawals. Combined with Social Security, he's in the 24% bracket. Had he converted $100,000 a year from 62 to 72, he'd have paid 12% in taxes. That 10-year window after retirement, but before RMDs, it's the lowest tax rates you'll ever see. He missed it. Cost him over $180,000 in unnecessary taxes. The best time to convert is when your income is low, not when you need the money. So keep this in mind. Those that are early in retirement or have lower incomes, you want to transfer it into Roths whenever you can when you're paying low taxes. So I did this growing up. I contributed to a Roth IRA when I was young. And since during some portion of my area, I wasn't making tons of money, but had children and write-offs, and I was married and she was not working, I actually put my money in my Roth 401k at work while I had a lot of write-offs and not paying a lot in taxes. As my income grew, I put more and more into pre-tax 401k to reduce taxable income as I was working and making money. More and more money, and my write-offs were held relatively stable. So I did a Roth 401k for a while, and then I swapped into a pre-tax 401k to reduce taxes. As I retire, or if I retire at some point, I can swap a lot of that 401k pre-tax contributions over to Roth as I get older. And I can do that. And I will do that when I'm not making a ton of money. That is a part of a strategy that I don't hear a lot of people talk about. I know on the website, a lot of people are making quite a bit of money that are in the community. A lot of good picks, a lot of, getting some 10 baggers behind us. As weird as this is, they're asking a lot about taxes. Andy, we need someone to talk to us about taxes on the website. And it's like, okay, that's when you know you're in a good situation. That's what I'll say. You're in a good situation when you have to worry about taxes. Gary Baum says by 2030, the solar industry alone will require over 424 million ounces of silver. When you transpose this against the stagnant 800 million to 1 billion ounce total annual supply, the picture becomes terrifyingly clear. Solar power alone is on track to consume over 40% of the entire world's annual silver supply. And that is just one source of demand. This does not include the silver needed for the AI data centers, the 250 million new electric vehicles, the billions of new robots, the 5G rollout, or the trillions in investment demand as the world wakes up to the currency debasement crisis. It is a mathematical certainty. There is not enough silver. Guys, doesn't that sound crazy? Makes me want to go buy more, but I kind of already loaded the boat when I could. We don't have enough silver. We don't have enough copper. You know what that also means? That whatever we have in the future here may or may not transpire the way that we think it will. We may need to burn far more oil, far more natural gas, far more coal just to cover the shortfall in silver because we can't build all the electric vehicles that we want to, that we can't build all these different things that we want to build, that maybe solar is constrained by copper and silver. So maybe we need to burn more coal. I mean, I don't know if what's factored in here, guys. I don't know if this is all factored in to the potential of the future. I see all this demand, and then I look over at the supply and I'm like, where's the supply at? Now, future silver demand, as weird as this sounds, is oil demand or diesel demand because all of the mines that are going to produce this are generally from diesel. But what they're trying to do is I think they're trying to offset some of this. I think they're going to try to maybe do ammonia. I think they're going to try to do electric stuff, but I don't know if electric's going to get us there. We could do hydrogen, but hydrogen, it's a pretty big energy sink. The energy return on investment is incredibly low. But could we convert perhaps nuclear into a fuel, hydrogen, and then use that in some of these vehicles? Maybe. I mean, what's coming ahead of us? This is the best time to be interested in energy investments. I think energy is going to be the biggest theme for investment going forward from 2025 onward. It's all energy. And silver and copper, they're going to be short from energy. So coming on down, it says, Tim Hack, oil could also be bottoming and soon send a signal that inflation is far from over. When the Ponzi system dies, smart money flees back into reality. When you fear that a year from now, your paper note buys you 20% less, and you see the tech sector valuation, you seriously start thinking about where to park your money. At some point, the first choice, silver and gold, is dried up. Then you get creative and buy other things that people need, all with the goal to get your cash levels low. It can happen very abruptly. And when the real wake up call in the commodities sector hasn't happened yet, 2020 was the start, but not much more. I think silver will be the wake up call, and it is imminent. He's got crude oil here, and this here is a breakout. If you draw the trend line through this way, which I do, that's a 3-hemp consolidation breakout retest. And then we're going to see it move higher with time. People don't want gold and silver per se. They want it as a store of purchasing power. What they really want is they want the experience at the end, right? They're saving this purchasing power for experience. Experience, whether that's a vacation, whether that's buying a new car, whether that is, I don't know, whatever thing they want to do, it almost always consumes oil or energy. The experience is the conversion of purchasing power through energy into experience. If you were to kind of like think of it as a holistic approach to people buying whatever it is. If they buy materialistic things, that is embedded energy into whatever product is made. So whatever they're doing, they're storing future purchasing power, which is storing, quote, energy demand. And as this world grows, it becomes more complex. AI, data centers, all these things. That's all energy. Everything is energy. So I'm curious to see how this plays out. I think the big theme over over the rest of my life will be energy investments and demand. Grady says the inflation narrative when posted the link post below a year ago was that inflation was backing down. We are seeing the same narrative now. In fact, we've seen the same narrative for almost the last 100 years. Many forget the Fed, like all central banks, are in the business of managing expectations and with that behavior plus thinking, not in the business of telling the world what they actually plan to do. Their horrible prognosis track record is a result of this, not a result of incompetence. And as we know, the mass media is touting what the powers that be wants it to. So the standing narrative for inflation is always that they more or less always have a positive outlook. And it would probably be a misconduct to say anything else. In the link post below, coffee broke out of and back tested a pink 12-year huge inverse head and shoulders pattern. Did that look like inflation was under control? Not really. Does the chart below with the breakout and backtest of the blue 50-year trend line look like they have inflation under control? Not really. Coffee was at the same price level 6 months ago. It was the 50 years ago. Does that make any sense? Of course not. I think we're about to discover what the real unsubsidized and uncontrolled price of coffee really is. Like for most other soft commodities, agricultural products are going to skyrocket, and we know what that means. When they skyrocket, that is the demand for fertilizers. So the farmers, as they get more money for corn, soybeans, coffee, and whatever else they're growing, that will be future demand for fertilizer. So the way that I'm playing this is through fertilizers. And I've got some pretty good picks that I share, obviously, on the website. Permian production growth is slowing. This matters more than people think. For the past decade, the Permian was almost the only source of global supply growth. At its peak, it was growing 1.8 million barrels per day year over year. Nearly the entire output of the UAE at the time, 2.7 million barrels per day, and more than average oil year over year demand growth. In just 15 years, U.S. shale added 8 million barrels per day, slashing America's reliance on imports. The shale revolution was essentially an oil subsidy for the world. It suppressed oil prices while investors lost billions. Now that growth engine is slowing. The subsidy is over. So we're seeing the growth in Permian oil output slow way down. And that's where the majority of the growth came from. So can we grow oil production outside of shale? I don't know. And that's really the bet. The bet is you can buy stuff really cheap today, and you're betting that we're not able to grow as fast as shale did, and that between now and 2030, there's going to be a problem. That's kind of how I view the energy oil markets. We're also throwing on copious amounts of electricity demand, which is going to eat up whatever natural gas production we've got. So there's this big energy theme coming. And in the background, you've got copper and silver shortages. If those shortages materialize, you don't have plans B, C, and D available to you. You can't do renewables without that. So prices will spike, which they're doing. We've got the 45-year cup and handle in silver. All of that, they're going to say, go mine a whole bunch more copper dust and silver dust. That's all energy demand. And then it's also part of the solution to reduce energy. So it's both the solution and the problem to future energy demand, which is silver and copper, which will then blockade the growth of some of these renewable areas. and electric vehicles and so forth. Grady says rising wedges are mostly bearish, but sometimes bullish, and then they are usually very bullish. So he's talking about this gold chart that's broken to the upside of the rising wedge. I'm not going to go through all of that, but he says had to break high above breakout level 1673 in order to have room to drop for the back test for the years after. The largest valid bullish rising wedge I have ever seen in gold, ripping to the upside. And what do you think silver's going to do? You think it's going to go down when gold's breaking this rising wedge? No, it's going to rip. It's breaking the 45-year cup and handle. It's interest rates going up and the unwillingness for countries and individuals to purchase bonds. At some point when interest rates go high enough, it's going to impact financial assets. This is going to rocket. Just like Jim Rickards was talking about and some of those other guys. Now, do I think it's going to go to 100 grand? I have no idea. I have zero idea how high this is going to go. Someone will ask me, well, what's an exit plan look like? Tell me if they're going to solve the debt issues. If they're not going to solve the debt issues, I don't want to hold anything else. In terms of commodities or precious metals, I don't want to hold any of these other assets because this is the spot to be for as long as they have a debt problem. There is no exit. The exit, what are you exiting into? Fiat currency? You want to have enough to protect you against stupidity of governments printing too much money and creating too much debt. We talked about that one. So that's where we're going to end it. We'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Specials the coupon code. Look for a midweek update that's being released today. So that's up on the website. That's where I go through and share my opinions about what I'm doing with all of my investments. Now, I get in really early, guys. I get in really early. I sit, I wait, I buy a whole bunch, and then I let things go. And that's how I make majority of my money. Now, when things start to move on up, I tend to pull back and I don't buy as much. Maybe we're still early enough where these things can continue to run for a very long time. But for me, I've got really good entry points on across all these different sectors. I'm not selling anything. I'm letting it ride. That includes gold and silver mining companies, physical metals. I do a lot in the commodities space, dry bulk shipping, tankers, oil, which includes just not oil, nat gas, and stuff like that, but exploration, production, energy service, coal companies, lithium sector, copper, base metals. I look at everything, nickel. And then if I see that there's a really great opportunity, I share it with everybody in the community. I'm not talking about big copper companies or something like that. I'm talking about ones where you do the homework and it's like, okay, what are the best mines left in the world? Where are they? What do they look like? What are their ore grades? Now I don't share all that every single second, but the companies all possess these types of traits that I look for. And then they got the big fractals. So that's what I'm sharing. I'm not sharing little, duds or ETFs. I'm sharing stuff that I think has good potential possibilities in the future there. But that's what I've got. So we'll catch you next time, guys. See ya.